Hey, good morning. It's Super Tuesday. Time to vote, time to trade. Currency traders, let's trade. Today we'll go through the dollar pairs, the yen pairs, gold and oil, and anything else that you want to cover. Just please ask questions, get involved. Remember, you're the boss. I'm just a humble currency trader, willing to share my 15 or 16 years of trading Forex full-time. Please remember to like. Please remember to subscribe. The reason you subscribe is when I click start to stream, you're notified and it says, hey, if you're available, come join us, and it brings you right into the room. Super easy. And also, if you like my charts and all my templates, the link to the free download is in the description. So without further ado, let's get going. So good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but it's a really good idea to be small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. If you find that these videos are helpful, enjoyable, entertaining, if they're making a difference to you and in your life, would you please pay that back by visiting TradersWay.com, opening up a demo account. TradersWay is a foreign exchange brokerage firm, and they would like to earn your business. Please give us a shot. We care about you. And we look at these educational webinars that we do every single day as an investment into your future success. So when you find that, please visit TradersWay.com and become a client. So how you doing? Joe and Jim? Stevie? Good morning. All right. I'm just, where I need to move this chat around. Where's the chat going to go? And if I move that there, then what's going on? All right. Oh, now that's full screen. Hang on. I'm almost there. I'm an old man, guys. Oh, I don't know technology. At what point will old people not have problems with technology? I don't know, huh? Because when I was a child, well, when computers came out, I had a 486 DX, brother, with a math coprocessor. So, anyways. So I guess I can never be too old. All right. You got charts. Okay, everything's good here. All right, so let's just start with gold. This is XAU for our chart. We have this plan going back a bit, if you recall. I thought we had this marked up. Well, let's just mark it up. Okay, price action, pretty basic price action. Pretty basic monthly swing, as you can see, kicking off the monthly central. All of that is generally bullish, especially if you're a bull. That's going to be Kool-Aid for you. And then post non-farm payrolls. And as of yesterday, our trade plan was bring it down. Plan A. Was this, I can't even see that. What is it, 126 something? Anyways, weekly central pivot point might be a good place to buy. That's a plan A if you're a bull. And plan B is to bring it down into this support. If you click out, you can see it's been support for a while. I guess you could bring it down even a little bit lower if you want to be nitpicky about it. Let's be nitpicky about it. That's okay. Okay, kind of like that. I could see I was trying to grab this stuff. So yeah, it's all kind of there, but really what we're talking about is bringing it down to the M2 on a weekly basis. So for a bull, plan A was to buy it here. Plan B was to buy it a little bit lower. And sometime during or after our webinar yesterday, it looks like it made plan A. Right? Cool. Nice. Well played. 1, 2, 3, 4, 5, 6, 7 hours ago. Asian. That's China Open. Shanghai Open. Yeah. What if it's the Shenzhen Open, is what you're saying? What if it's not Shanghai Open? What if it's Shenzhen? I stayed in Ritz-Carlton in Shenzhen. Beautiful park across the street. Big conference center as well. It was way up near the top with a beautiful view. And I could, from my bathtub, yeah, I know. Hey, from my bathtub, I could see the Shenzhen stock market. The exchange. Like, hey man, cool. All right, so maybe it's the Shenzhen. Because the funny thing is, I'm like, wow, I don't know much about the Shenzhen exchange. And it turns out it's pretty important. Anyways, up, 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 down, down, buy, up, 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 maybe. Okay. And then at some point, if it goes higher, which a bull would expect, we need to breach this level. Don't we? And that would be a place where bears are going to want to sell. And you can see it's not really that important on a weekly basis. Monthly basis, the real resistance is sort of up in here. So that's kind of where a bear is going to want to sell, is up in here. And that's where a bull should be cautious, right? Because we're going to connect this resistance. And we're going to try to connect this resistance. And we're going to try to connect this resistance, which you might as well just drag out. Oops. Drag this out to here. Right? So this whole area is what I'm suggesting is a resistance zone. So for bears, you're thinking, okay, if this creeps up a little higher, I mean, you could do it now, but wouldn't a little higher be better? And then maybe bears take a shot up in here. Capiche? What do you stink? Smell like a plan? Any questions so far? Boom. Good morning to you. Boom. Please remember to subscribe, guys. If you're new to the webinars, when I click stream, it'll give you an alert, and you just click a button. It brings you right into the room, easy peasy. You don't have to like find the channel and then find the live webinar and then log into that. It's just faster. K-Star wants to place an order up there. Yeah, you can do it that way. For sure. Okay. But I hope you always take the opportunity of backing out a bit. This is only, a couple of months. And ask yourself a very, very basic question. Where is it that we're going? Are market participants taking this, buying it up, right? Are they bidding it up, or they're taking it down? And I think it's a helpful process to be able to do that, because these are, on 4-hour candles, I mean, we're looking at weeks and weeks and weeks. I remember being in this, right? You remember talking about it way back here? I said, just leave it, right? Just leave it, let it break, and then what? What did we discuss back here as it moved sideways for a couple of months? I said, just let it break. Then what? What's the strategy after that? Antegleben, Guten Globen. Wait, is that Def Leppard? Antegleben, Guten Globen. Trend follow. No, it's a breakout. So the way that you trade a breakout is if it breaks out to the downside, let it retrace back and then sell it. I think I even drew something like this. Or if it breaks to the upside, okay, let it retrace and then take it up. Is that right? Was it, Jimbo? That was. You're doing Def Leppard on me. Wow, and I caught that? Even I'm impressed. Pretty amazing, Jimbo. So, you see what I mean? Now, it's hard to see that play, you know, here, let's say. Well, I suppose maybe it's not. Well, yeah, it's hard to see it here. That's why it's good to pop this out and then even back up further and say, oh, we were consolidating for 2 months and then we got a breakout to the upside, not to the downside. And this works in any time of range-bound market. I remember discussing with you guys that you don't have to sell at the bottom, you don't have to sell at the top, you don't have to buy at the bottom, right? You just wait. Does anybody actually remember that? Yeah, K-Star says, but it took a while to retrace. Well, it's just because we set this up on a 4-hour chart. Yeah. But it would work the same on a 15-minute chart. It does the same type of stuff. Are you getting it? Are you getting it? Okay. Do we take help of fibs? You could. In my old age, I've been removing things. Like I used to use MACD a lot. I used to use stochastics a lot, and they're helpful. I just see them. And now I used to use fibs a lot. Like I would measure this and I'd say, oh my gosh, look at that. This is a 50% retracement. In the end, I realized it's really not that important. It's just a pullback. Because, if it bounces here, I'd say, oh my God, it's at 382. Well, it's just another entry, right? I'm just too old for this nonsense. So anyways, yeah, buy there, buy there, buy there. They're just plan A's and plan B's, right? What's plan A? That's another one, another way of doing this. If you're, right, plan A somewhere around the 382. So it would have been this one. Or you would have measured it, well, the original one was up there. Anyways, it's all the same, guys. Don't get caught up on it. So what is a Fibonacci? At the end of the day, what is a Fibonacci? If price is falling like it is here, do you sell low or do you sell high? If price is doing this, heading up, do you buy low or do you buy high? Okay. Right. Well, yeah, I know what you mean, Pank. But the thing is, Fibonacci just measures how far it has. It doesn't. It's not a leading indicator. Okay. So what I'm saying is, okay, yeah, that's a 50%. Great. But I already basically, I knew that was the line. This one. Okay. Now you're probably talking about this one, so I'll zoom back in. Okay. But all these things do is you want to buy a dip and you want to sell a rally in these situations. Fibonacci just measures how far it's retraced. It doesn't say, well, it should retrace at the 382. It doesn't say it should retrace at the 618 or vice versa. Okay? It just tells you that it has, And once it has, then it's kind of giving you a guidance on how far it will extend. Okay? But the more important information than that, because that just tells you that it has happened, not that it's going to happen. How should I do this? Okay? This information is much more interesting to me. And we know it from this, and then probably even further back, that this is simply a role reversal, and that's a leading indicator. We knew that when we were way up here. In fact, we knew that here, if it broke out, it would retrace, probably roll reversal, and then take off. Okay? Okay? And so, yeah, so right, as far as Fibonacci, okay, once it's turned the corner, then Fibonacci is really good because you can say, oh, well, it bounced at the 50%, so it should go to the 1382 extension, okay? But it doesn't say it should retrace to the 50%. It just says, oh, it did, and it has, and it's done the 50% retracement. So it's a lagging indicator, okay? So, like, again, the leading indicator, what did we say on Friday and then again on Monday? The leading indicator is, oh, well, if it falls down to here, that would be an excellent place to buy. If it falls even further, that's also a decent place to buy. But they're both ahead. Okay? Right? And then you draw this and you say, oh, well, it's a 382. Yeah, but you already knew that. I mean, you didn't know it was a 382, but it didn't matter. You're already buying a dip. You don't need like a second level of indicator to say, look, not only has it retraced, which you can see with your eyes, right? Not only is it in like a secondary level of support and resistance, which you once again can see, not only has it retraced to a week, one of the two weekly pivots you want to buy, but on top of that, it's a 382. You're like, well, it didn't matter. You had enough information, right? Does that make sense? Says sometimes a pullback is not much. And but the thing is, that's not what you're looking for, right? Buying something that's taken off, you need to ask yourself bigger questions like, well, why did you miss it? Because if it's taking off fast and it's not even retracing, then what did you miss? Like, because if it's moving that fast and it's not retracing, that means everybody on the planet except you is on the trade. So what did you miss? And just back out and say, well, I don't know what's going on here. It's taken off. Because remember, your number one concern isn't to make money. That's your job. That's your reason for being, but it's not your number one concern. Okay? So, like, using the military analogy, and I think I have this in my book, where, right, the ultimate goal of anyone in the military in active combat is to win the war. But you don't wake up in the morning, put your boots on, and you're like, yeah, today I'm going to win the war. Right? But that's the overall goal, right? You got to get in the war, and you got to like kill some bad guys or make them surrender. But that's probably not what you're thinking about at that day or that moment, right? What's the plan today, guys? Win the war? Thanks, Sarge, right? So, okay, win the war. But what's the mission of what is the goal for the day? The goal for the day is to achieve whatever mission you've been given. And if everyone helps achieve the mission, then you can achieve that mission, but then there's the next mission, and another mission, and there's lots of people doing all their missions, right? So if everyone just accomplishes the mission over a long period of time, eventually one side wins and the war is over and everything's accomplished, right? So, but when you're actually in the foxhole, and they're shelling you, you're not sitting there like, okay, you want to achieve the mission, but that's not why you're shaking. That's not why you're crying or feeling like you want to freak out. What's the big deal? Well, you don't want to die. The number one goal is to not die, right? I think in the book I say you don't want to do something stupid and get yourself killed. And in Forex, that means the number one goal is to not lose money, right? So you have to put yourself in that sense, in that mindset where if the market took off and it's moving super fast and it's not even retracing and you can't get in and you feel like you're missing out, well, you did miss out. You don't deserve it. The number one goal here is not to lose money. So if you missed it, you don't deserve it. Let it go. Set up the next trade. And yeah, it might not be today. It might be tomorrow or next week. But then now that means you got time to figure out why everyone on the planet is on this move except you. What were you doing? I mean, maybe you're looking over there and it came from this way. Well, that happens, bro. But to jump in and chase and to force yourself into a trade late is just dumb. It's just way, way dumb. So imagine if you're looking at your trading record over the course of 3 years, over the day after day after day after day for 3 years. That's like 1,000 trading days, right? This one trade that you're missing out on because you didn't see it is not worth the risk. Because it's worse to see a big drawdown on a 3-year track record. What was this? You're like, well, the market was moving fast. I didn't know what was going on. I had this fear of missing out. So I jumped in, threw some money at it. Sure enough, it collapsed because I bought it high at resistance. Well, you don't want that on your track record, right? So you might as well just let it go because no one's going to see it. Imagine 1,000 days from now and they come in and are like, what did you do here November 7th? Oh, right? No, nothing. You're like, well, I didn't get the trade because it took off without me, and so I let it run without me. I just set up another trade plan. So you want to have this huge track record of successfully executed trade plans. Don't worry about trading, pip, money. You want a track record of 10,000 successfully executed trade plans. And you might have 20,000 trade plans that were never executed because it didn't come together. Well, good. You don't want that on your record. You want successful track record of executed trade plans. And of course, you're only going to take the shot if you are absolutely certain you're going to make money and if you have an unfair advantage. Right? Does that make sense? So Chuck says the mission is to buy at support and sell at resistance or nothing else. Right? But, you know, we as traders, especially as a shorter term trader, especially smaller account, like if you have less than $100 million, you're considered small. On professional standards, right? Because what they do is they look at like AUM less than 100 million, AUM above 100 million. And in financial management, 100 million is nothing. Like, that is small time. New guy in the firm money. That's short stack, 100 million. You can be in a small town and have triple that, 5 times that. Well, now you need a support staff. Okay? So if you're short stacked with less than 100 million, we can get in this video game mode. Okay? Right. Botman says it makes perfect sense, but it does not feel good when you're missing the big trades. This is it. You have to be bigger than that, right, Batman? That's where we're trying to get. That's where we're trying to get. No, that's cash, assets under management. Okay? So that's where we're trying to get. So you're like, it makes perfect sense, but it's difficult to do. So that is the journey you need to be on. And you need to coach yourself every single day. That is the journey. That is the hard part of trading. Like, look, I could probably put you in a room at a Holiday Inn over a weekend and teach you everything you need to know about technical analysis to trade successfully. Okay? Some of you guys have probably paid $5,000 for something like that. And what happened? Now you're successful? I mean, you need to know technical analysis, right? But there's something more. Is it the the fundamental stuff, yeah, I think you need to know fundamentals. But once again, that's not the missing piece, is it? Now, if you're going to be a professional, let's say 5 years from now, you want to start your own fund, great. Will you need to know fundamentals? Oh, yeah. Otherwise, you'll just sound like a babbling idiot in front of somebody like, I trade really good. I don't know what's going to happen next month. If you ask me a question about, what is the dollar going to do over the next 6 months, I'll tell you, I have no idea, but I'm really good at trading double bottoms. Okay? You got to know a little bit more than just technicals, right? But then on top of that, the real hard stuff is to be able to say, oh, look at that thing take off without me. Too bad I'm not on it. That, right, is patience. That is discipline. That's the stuff I tell you every single day, but we know that's the hardest stuff, but you got to get there. The fear of missing out, you got to somehow change that. Okay? And you should say, I don't need this over the course of over a course of 1,000 trading days. Because that's what you're trying to do, right? Show somebody that you have a track record of success over a long period of time, because the long period of time will show changes in market conditions and that you are able to adjust. So just because, like, here's the funny thing. If you are an investor now, so let's say you got $1 million put into a Forex fund, what do? Well, you start interviewing CTAs if you're investing in the United States. CTA is a commodity trading advisor, and it's the NFA designation for you to be a professional Forex trader. And on top of that, you have to register as a Forex firm. Why? I don't know. And why is it 10 times more expensive? Who knows? And all this crap. But anyways, you go through all this licensing, and now you can trade other people's money, right? So wealthy people just look you up in a database. They go to, like, I don't know, Barclays Hedge, and they pay some money, and they get a big list of CTAs. Everyone above 100 million, everybody below 100 million. And you're like, right? So anyway, so they look at you, even though you don't have 100 million, and they look you up, and they look at your track record. 6 months isn't enough, guys. So that you might show them you were kicking butt for 6 months in a row, maybe even a year. But then the market conditions change. And usually what happens is if you invest into someone that's doing ripper awesome right now in these market conditions, you're already a year late, right? So suddenly you invest and they do pretty good the second year now that you've invested, but by 12 months after, so 24 months into this stretch, the market changes. The Fed stops raising interest rates, let's say. And then the whole thing collapses, and that trader keeps doing what they've done for 2 years straight, successfully. And their third year sucks. And of course, it's, from an investor's point of view, the trader doesn't suck until they invest. Well, it's because you invested into someone that was doing really good in the old period. But what you want to do as a professional investor is find someone that's been around for 5 or 10 years, guys. Look at it and say, oh, well, here's what they did before the financial crisis of 2008. Here's what they did after the financial crisis of 2008. Here's what they did during the Fed normalization and tightening cycle of 2018 to 2020. And then here's what they did when the economy collapsed in 2024. And they're like, oh, this is really good. So now your fund that you're going to start in 2025, are you thinking this way? In 2025 or 2026? When you start your fund, you'll have this beautiful track record and you can sit down and explain it to a client. Oh, well, here's how you handled all these changes and policies, and here's this big Brexit thing. Let me show you how I took advantage of that, and more importantly, how I protected myself from the downside risk, right? That's where you need to be getting. Okay? Right? So Kevin says, don't you do the same thing over these 15 years? No, the market conditions change. Okay? And a professional investor that's going to give you millions of dollars wants to see how you adjust to changing market conditions. Not that you've just been good for a year and you've made 20% return, or 40 or 100% or 200%. None of that's important. What's really important is how did you do over 5 years, let's say, And what's your risk-adjusted performance? What is your volatility? All this kind of stuff. And that's where you need to be getting. It's not technical analysis. It's not fundamental analysis. It's your ability to say, this isn't my trade plan. The market's moving without me. I wish I was on it, but I'm not on it. And I'm patient for it to come back. And I'm disciplined not to jump in. And that's the moneymaker. The rest is child's play. Okay? You know, if you just put 2 years of work into technical analysis, you could master enough. Maybe not everything, but you don't need everything. Most of stuff, like, for example, like insert indicators, all this stuff is basically redundant. It tells you the same thing in different ways, right? You know, like this force index is not the thing holding you back from success. You're like, oh my God, now I can be a success because I got this force index, right? That's not the important stuff, right? The technical analysis you could probably do in less than 2 years, but I'm being generous. But you got to look at it from my point of view. You know, when I start a business, I look farther out than 3 weeks, right? You know what I mean? When I joined Harvard, they're like, this is a 4-year program. I'm like, yeah, I got it, 4 years. This is going to cost you 6 figures. Yeah, got it. And they're like, wait, are you sure? I'm like, yeah. They're like, no, you don't get it. It's going to be 4 years of hard work, hundreds and hundreds of hours per month for 4 years. And you have to pay lots and lots and lots and lots of money. Yeah, I got it. Right? But what if you did it? What if it was this other way? If you actually sat down and said, you know what? I'm going to give Forex 5 years. Once I know technical analysis, and once I'm sort of pretty half decent on fundamentals, right? Once I get there and I start to trade relatively consistently, from that, you're going to give it 5 years. Or 10 years. Are you thinking 10 years ahead? Maybe you should. Right? Ask yourself, is this a child's game or a game of kings? Well, the interesting thing is the Forex market doesn't care what religion you have, what color your skin is, who your daddy was. And we kind of know that all these things are not supposed to matter in the real world, but they do, you know. Forex is just do it. Just freaking do it. It's yours. It's yours for the taking. It's right there. Nobody's going to stop you except yourself. Okay? So what do I want to do here? I'm still waiting for CAD. It's so frustrating. Patience, right? Patience, grasshopper. Okay. What was the trade plan on Aussie from yesterday? Let's go into it in an hour. I wanted to dip maybe to the 4-hour 5 EMA. Remember that? Didn't get it. Sorry. It did drop to this really, really small, you know, this is price action now. It did drop to the roll reversal. Okay? It did drop to the roll reversal. Doesn't mean that you need to be on it. How do you enter that, Wayne, up here? I was pretty clear yesterday that that's not the question. The question is, why didn't you have the plan here? We planned it out. This is the double bottom, but it hadn't occurred yet, and we talked about it only for 2 weeks in advance. But then when we finally got there, it did bounce, cool. But at what point do you throw down a trade? Well, super aggressive, maybe too aggressive, almost for sure too aggressive. You just throw down a buy order here. Okay, that didn't work. But the higher high, higher low certainly worked. And this, we had a trade plan at the time, right? Monday of last week. In fact, we planned this out on Friday at the swing trading group, right? Anyways, this was a buy. So like you didn't get this buy, and then you didn't get this buy. So it made a higher high roll reversal. So you didn't get that buy. So I wouldn't be up here saying like, how come I can't get in? How come it didn't retrace? You know, how do I jump into this now? Like, you're not supposed to be jumping in it now. That's why you didn't get the chance. You see that, guys? This is what you have to realize. You're not supposed to be jumping on. Imagine the cliche here of someone buying it high because their fear of missing out. They need to jump into this. Yet they missed this trade, and they missed this trade, and they missed this trade. So, like, this is almost a punishment. Sorry, you guys can't see this? Sorry. This is almost a punishment, right? You know, like, someone sloppy is going to buy it now, even though they missed the 3 easy trades. Now they're going to buy it super high, overbought, out of position. There's no swing trade on a monthly basis on this week. There's no swing trade on a weekly basis. It's way elevated, way overbought, and now they're going to buy it. And you just know what's going to happen, right? You just know it. It's so cliche. It's so sad. Someone's going to buy it now, and it's going to come down. Right? So what is your trade plan? Right? Well, we had this one, so maybe you incorporate that. That's up to you, depending on your aggressiveness. But this is the obvious buy. So plan A and plan B. And what if it doesn't pull back? Well, so what? Right? That's why you have to get to. You're like, well, if it doesn't come back, well, what do I care? Your trade history, this track record I was trying to tell you about, you know, that over a thousand trading days, like missing this, it's going to be invisible. No one can see that. Losing money there can be seen, but not trading it because it took off without you, right? But shouldn't you be more concerned, like, why did you miss this? Why did you miss this? Like, how many, like, why, right? Like, you're supposed to be in down here, right? And why are you freaking out now? Like, why didn't you freak out then and then and then? Why are you so desperate to get in it now, right? When the bears are setting it up to sell. So those are the bigger questions. And those are not easily answered. But I think if you're the type of trader that asks yourself those questions, you'll do fine. You'll do fine. It'll just take time, but you'll do fine. But this is not a buy. There's no way that's a buy. This was possibly a super aggressive out of position buy. Not recommended by any means. Okay? Okay? Not recommended by any means. The reason you can't get in it now is because you're not supposed to be getting in it now. Okay? Let's do this one. Tricky. Okay? But tradable. Simple role reversal. Looks like we have this moving sideways, so I basically set it up like a breakout. So we already covered that today, but okay, let's move this beast, or not beast, but pig. Okay, there's a breakout, retracement, right? We talked about this on the other pair. There you go. That's how you trade a breakout. Identify the support and resistance, so it was rangy. I could be able to move this, am I? There, okay. Okay. This didn't break out here. Sideways, 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 sideways. Breakout. Wait for it. Chow. Okay. In particular, if you're already a bull, okay. This is one of those trades that didn't retrace quite enough. Okay. You see the monthly swing. It's basically what this is. Okay, on a monthly basis, we're doing this. So just like on gold, I like to ask myself, where is it that we're going? What's the roadmap? Okay, I'll do Euro USD. Buy opportunity for USD ZAR. Well, I have too many brothers and sisters in South Africa. I refuse to buy USD ZAR. Okay. So that's kind of where we're going. Oh, so let's say on a profile, let's say you found an old profile that I don't use often, like CAD Swissy. Okay. And you're like, this isn't the right template. Okay. Right click on the chart, highlight templates, and you will have one called something. I think I renamed them slightly, but here's one that I've saved for myself. Oh, that's on weekly. Wow. And then suddenly it's there. So that's how you adjust your templates. You don't like that template, you can do this template. If you don't like that template, you can go whatever. You can create your own templates. See? What do you think of that? Do you like that one better? So that's how you adjust your templates. Okay. I gave you a whole bunch of templates in the download. So that's how you adjust your templates. I wonder if it's this. Yeah, I probably gave you that one, right? Template. Pivot point chart template FX bootcamp. That's probably it. Are harmonic patterns useful? Yeah, for those that know how to trade them, I'm sure they're very useful. I find them too complicated for me. But if you have, let's say, an engineering, if you have engineering personality, maybe it's really good that you're looking for particular angles and all that kind of stuff. Okay. Luis, was that helpful, Luis? If they don't appear, then you haven't installed the files correctly. So if you do if you click on, this and you get that, oops, it's because you didn't install the indicators in the proper folders. Okay. So rewatch the video on the download page or go to YouTube and there must be 100,000 videos on YouTube about how to install them properly. Okay, because that's the only way that wouldn't work. So going back to the harmonic question, so I don't trade harmonics. Doesn't mean they're wrong or anything. It goes actually back to my very first Forex conference, happened to be the very first Forex Trading Expo in Las Vegas. And I just happened to be a speaker. Yeah, I'm the first Forex conference for retail Forex traders. I was a speaker, so I was an expert already. So I did my presentation. It was called Strategic and Tactical Forex Trading. Amazing, right? And then I went to check out other people. I'd never met another Forex trader, so I went to see someone else do a speech. And they did one on Gartley patterns. And he started doing this presentation. I'm like, oh my God, I am such an amateur because this is so complicated. Like, I have no idea what this guy's talking about. He's like, well, if it's this angle and that congruency to this thing, and, I'm like, oh my God, and you have to do a little bit of math. I'm like, oh my God. And he has charts where you can draw triangles. I'm like, this guy is insane. And it was calculating the angles of the triangles and that one, like, oh my God. But then I started looking at him like, this guy is doing all of this where he should just sell. I'm like, look, you're at resistance, sell. And anyway, so he's doing this triangle and he talks for a half an hour. Then he starts doing the other triangle. And then we're about 40 minutes into a 1 hour presentation, and then he realizes there's an error on his chart, on his PowerPoint, and there's not enough time to fix it, and he just kind of goes cold, and he's like, sorry, I messed it up. This is totally wrong. And the whole time I'm thinking, like, I would just sell this. Like, why would you need all that stuff, right? So it doesn't fit my personality. Plus, I have this baggage where I see a guy go up there, and it's way, way, way too complicated to the point where he messed it up. And then we're just, like, no joke. It was an awkward silence. Like, he just kind of like, I have nothing else to, there's nothing else I can do. So maybe I'll take questions about something, right? And it got really weird. Right? I know you're supposed to get weird in Vegas, but that was too weird. So I have that baggage, but yeah, if you know how to trade them and that fits your personality, then by all means. Okay. How can you see my presentation? You Google strategic and tactical Forex trading on YouTube. So I am now associated with something like 4,000 videos on YouTube. Can you use them in confluence with pivots? Well, everything is in confluence of everything else. This is what I'm trying to tell you guys. If I put 1,000 successful traders, successful Forex traders in a room, everyone's doing something else. Everyone's doing something different. And everybody's successful. And very often, I think what you'll find out is we're all basically doing the same thing, using different indicators. Like, we're doing all this so we can sell at resistance and buy at support. So you find whatever tool works for you, right? ABCDs are better than Gartley's and 1, 2, 3s, and yeah, great. Okay, great. So let's move over to yens. Okay. So we did the Aussie already. What about the beast? That looks crazy. Okay, you see what it did? What is this gray zone? I drew this yesterday. What is this gray zone? Hint. Wick, 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 wick. Right? Wick, 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 wick. It's a buy zone. We're stuck at a big pivot here. It shouldn't be a problem. I mean, it's there, but it's not a pivot that I worry about. I'm more concerned about this stuff up here, as I've already marked for you, I don't know, last week. Okay. It's hot. It's moving out of position, so it's tough to catch. But on a smaller time frame, you could try. Just be careful, right? Which one did I want to do? Okay. So do you think these daily pivots are important? Okay, the pink zone here is the projected high for the day. That's the conservative. I guess I can do it this way. This is the conservative projected high. This is the aggressive projected high. Fairly accurate. Here's the conservative projected high. Here's the aggressive. Okay. So we can go back. Let's start here. This is the buy zone. This one doesn't get you an opportunity. This is a buy zone. It actually was, if you were there Sunday morning or Sunday evening, it was actually catchable. That's the buy zone. today. This is today's buy zone. Oops. Okay. I guess I can go back another day. This was a buy zone. Then here we're in consolidation, right? Remember, we had this planned as a double bottom this way. Remember that? So anyways, so going back, you know, today there was a buy. Yesterday there was a buy. Friday no buy, but that was NFP. Thursday there was a buy. Wednesday there was a buy. Depending on how you want to play all this. You might have bought this and it went up for a few hours and then collapsed because you were hoping for the up. That's all right. So technically this was a buy and it worked for half a day. Technically this is a buy, right? Remember how we had this planned as well? On a different chart though, but remember we had it like this and like this. And then on a higher time frame, we simply had it up. Oop, well, I don't want to do it. Anyways, you remember. Gee whiz. Okay. Does that make sense, guys? Daily pivots in the concept of weekly, pivots in the concept of monthly. I start monthly first, then weekly, and then daily. Yeah, Marina's right, Brooke. Brooke? Groot! I am Groot! So here's one of the profiles you get in the free download. Nice and easy. Okay. So you tell me, do I want euro dollar to go up or do I want it to go down? Stephen H., you should. Now, I had the programmer make a small change. I haven't had a chance to review if he's done it correct. But if you did it today, it probably should work because I don't think he's changed anything to mess it up. But if you tried a week ago, then you need to try again because it does work now. Jimbo, does the world say, how would I know that? No, I want it to go up. Okay, I want this to go up. Okay, I have for a very, very long time. In fact, you should know my trade plan for the month is here to here. You guys should know this. That's my plan for the month. Okay, so that's the monthly plan. Okay, great. So what about now? What about this week? Well, let's drop into an hourly chart. Okay, where's my buy zone for the week? This is the buy for the month. Where's the buy for the week? Right here. Cool. I'm going to just throw these on top. They're not going to look right, but anyways. All right. So what's my trade plan for the day? Let's drop into a 15-minute chart. The trade plan for the day is buy it somewhere between here and here. Oh. Okay. Monthly, down here was my monthly buy. We had weeks to set that up. Weeks. Then the follow-up is to buy it at the weekly trade plan, which we did last week. And now today at the London Open, guess what? Now here's the part that'll blow you away. So I have daily pivots here, weekly pivots, monthly pivots. It's the same trade plan all 3 times. Buy at the M2, right? Buy at the M2. Well, buy at the, it's not M2, it's the zone between the central pivot point and the M2. So my buy zone, same buy zone, right? Trade plan, trade plan, trade plan. And as far as I'm concerned, they're all going here. Okay. Brooke, very good job. Yeah, well, it probably went the wrong way for you, which is fine. It happens. But very good. 18% is very nice, Brooke. Congratulations. It's a very nice return. Assuming you didn't do minus 20 in August and plus 40 in September. Okay. It's gonna uptrend for Euro USD, sir. Well, I don't know that. I can only tell you that that's right there is my trade plans. Now, all 3 could fail. They're just trade plans. A double bottom, 1, 2, 3, day trade. Right? A monthly double bottom, weekly 1, 2, 3, daily swing. And the target is about $1.16 to about $1.17.5. Okay, is it going there? I have no idea. Okay, where are we going to be challenged? Oh, where is resistance? Right here. Oh, that's pretty close to where we were. Yeah. And then the next one's going to be way up in here. I'm going to take this bottom and this top. It's a pretty big area. I might have to do it this way and then this way. Okay. Cool. So if I were to guess, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 take profit. Christmas, early, Caribbean, me, sipping drinks, beach, cigar. Yeah. It felt like that modern free-flowing jazz, huh? Is that 2,000 pips? It looks more like 200 pips. Depending if you're counting that as fractional. Yeah, if it's fractional, that's 2,000 pips. Most people would call that 200. Yeah. So today is voting day. We talked about it yesterday, but I'll just mention it briefly as we wrap up. The markets like certainty. The markets dislike uncertainty. Okay. Gary says leave the monthly target in trade in place throughout. Yeah, maybe. That you have to then manage it. Okay. This is just a trade plan. And then this is just a trade plan. They all have different things and you need to manage them differently, right? So my day trade, I'll probably take profit here. My weekly, I'll probably take here. My monthly will take there. But then I might buy, I might get a different trade plan tomorrow and then another one the next day and all that kind of stuff. The thing is, especially with the election. I don't know what's going to happen in the next 24 hours. So I'll have to manage that risk. Okay, so let me go back to what I was saying. The markets like certainty. They don't like uncertainty. So what is certainty? Certainty right now is the Republicans have control of the White House, the Senate, and Congress. And if they maintain that control, then it is certain to continue. The policies in place are certain to continue. And those have already been planned out, modeled out, invested into, all that kind of stuff. And so they'll know for at least the next 2 years, status quo. And that's what the market likes. Now, they might not like the status, but they've already made adjustments for the status quo. So they might hate Trump, but it has nothing to do with that. They know what the current policies are, and they've made adjustments in regards to those said policies. Great. Now, if today's election results appear that the Republicans have lost control of the House or the Senate, what does that mean? And the question is, nobody knows. We don't know what that means. Does that mean the government's going to go into a stalemate and nothing gets passed? The Democrats crush everything out of spite? Yeah, well, that's almost a guarantee. But again, we don't know if that just creates a logjam. Okay? If they lose the control of the House and the Senate, what does that mean? Are the Democrats going to try to bring Obamacare back? Or, once again, we don't know. So if the power in the U.S. government changes, meaning the Republicans lose majority in the House or the Senate, then we don't know what's going to happen, and that's uncertainty. And that will be bad. So if that happens, it's not that the Democrats have taken power. It's just that we don't know what the future is going to hold. It makes it very difficult to plan, and therefore probably not a good time to invest because you have this uncertainty. Okay? So if the Republicans lose control of the House and the Senate, or the House or the Senate, this creates uncertainty. The stock market will crash, the bond market will rally, the yen will get strong, the dollar gets strong, the Swiss franc will get strong. Okay? If the Republicans maintain control of the House and the Senate, now status quo, everything that's been happening in the last 2 years are going to continue for the next 2 years. It's already been planned for and budgeted for. All the projects have already been invested into. And people will be able to reasonably predict the future, which lowers the risk. And therefore, if that happens, the stock market rallies, the bond market falls, the yen weakens, the dollar weakens, the Swissy weakens. Okay? And probably CAD strengthens, Aussie strengthens, Kiwi strengthens, but we have sort of mediocre macroeconomics right now, so maybe that doesn't happen. But the other stuff will happen. Okay, dollar weakens, yen weakens, Swissy weakens. And once again, that's not the world's approval for Republicans. It's simply status quo means predictability. Predictability means investments will continue because the models that exist today will most likely accurately predict the near future, and game on. Okay? Unethical says, but Wayne, I heard from someone. First of all, that's a terrible way to start the conversation. Because, that according to history, midterm elections, the current party uses, okay, I don't care about loses seats. You either have majority control or you don't. Okay? It's binary. If they lose control, that's it. The stock market tanks. Bond market rallies. U.S. dollar strengthens. Japanese yen strengthens. Swiss franc strengthens. It's the end of the world as we know it. Yeah. You know, Jeremy says, does that mean gold will weaken too? You know what? I wouldn't be shocked if we got this situation where bonds rally and gold rallies, because people are just like getting out of riskier investments, and they're buying treasuries and they're buying gold just to own something, you know, other than what they're just getting out of the stock market as fast as possible. Jimbo says, don't trade USD Swiss franc. That sounds like a good idea. I'm not saying that, but that makes sense to me. Okay. Okay. So why don't you just watch it minute by minute today? Are you listening? Why don't you watch the election results today through the Asian session? Monitor what actually happens, meaning listen to what's being reported, get the final results. Notice that it'll move before the final results based on people guessing, and then you could have like a counter reaction. So like the media reports that everybody hates Trump, everybody hates the Republicans, and it's like a foregone conclusion that that the Democrats are going to take control. You know, and I'm not even a radical political follower, but even Bloomberg reports that. But that's also what they said about Hillary, and I'm like, really? And they were way wrong. So it's been reported one way, even through my media outlets, which are very few. And so Bloomberg's like, must hate Trump or something. But anyways, there's like foregone conclusion this can't continue, then the Democrats are going to take over. Okay, great. So if that doesn't happen, holy smokes. But also, it could be really misreported where all the numbers come in and they're like, oh, another one for the Democrats. Oh, another one for the Democrats. Let's talk to someone about how amazing the Democrats are and how quickly they're going to take over. What are going to be the new policies? Will they bring Obamacare back? And they talk to an expert that will talk about that. Meanwhile, something else might actually be going on. I'm not the crazy guy living in the woods with a spaghetti strainer on his head, talking to the mothership with, 5 years of water and firewood and ammunition, waiting for the end of the world. I'm not that guy. They usually talk like I just said, but it's just really, even in my normal sane world, it seems to be very biased. So that means to me, as a trader that can see clarity, there's a chance that it could be misreported because it's what's happened in the past. And you can get the market to react like, oh my God, the Democrats are taking over. Yen, 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 dollar, 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 Swissy, Swissy, Swissy. And then all of a sudden, by the end of the night, they're like, wait. Right? Wait. And suddenly it goes the other way, and that could happen too. So what I want you to do today is you can watch it in real time, watch your charts. Like I've actually sat with my laptop here, TV up there, drinking wine with my wife, watching the results come in and watching the market. You should actually do it and see how when things move up and down, if they're tied to results or not. And then once it's all said and done, once it's a foregone conclusion, what did the market actually do? Because then 4 years from now, when we go through midterm elections again, you will be able to answer the question you're asking me today. Wayne, what's going to happen over the midterm elections? You say, well, you know what? I did this 4 years ago, and here's what my experience was. Okay? So don't just let it be just another day. Treat it differently. Treat it as a learning process, a learning experiment. This is like a laboratory. You should watch, research, observe, take notes, write it down. And this might be a chapter in your book one day. Scientific methodology. Okay? So anyways, got to jump, baby. It was real. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Thank you for being a client at Traders Way. If you're new, please visit tradersway.com. Please like, please subscribe, and if you want my chart templates, download them. It's all good in the hood. I will see you tomorrow. Adios, muchacho!